Hi, in this video I'm going to look at the best place to invest in 2014. That's Japan. And I'm really positive about Japan because I believe it's at the beginning of a sustained economic recovery and a sustained recovery in the stock market. Now I can imagine loads of cynics out there rolling their eyes and groaning as I speak. And I understand that, I really do. You know, Japan in 1989 had a massive stock market crash and it's never really recovered since then. We've seen moments when there were early signs of a nascent recovery, but those recoveries have always petered out. But I believe this time it's different. This is a recovery that will last, and that's why it's very promising for investors. And I think this recovery is going to last because the government's reform program, known as Abenomics, is just so ambitious. And there are three main components to this program, often known as the three arrows. So we've got the monetary component, the first arrow. That's basically printing more money. We've got fiscal, the government spending more money, and then we've got structural reform. The structural reform is really important. It's about ending some of the restrictive practices that have held back the Japanese economy. So it's things like the mandatory retirement age at 60 in many industries. That should go. Many firms sack Japanese women when they have their first baby. That should end. If you end those practices, the Japanese economy's potential output can grow. But the most important of the three arrows is undoubtedly the monetary policy, the printing of money. And that's really important because I think Japan's biggest problem since 1989 has been deflation. What we've seen ever since then are periods of deflation when consumer prices are falling, followed by periods of very low inflation going back into deflation again. And that's bad news for the economy because it means consumers are reluctant to spend. Why buy a new car if you think that car's going to be cheaper in 6 months or a year? And even worse, it's meant that companies have been reluctant to invest in new business. That's because when prices are falling, cash is a very attractive, a very profitable asset to hold. So why invest? So it's essential to end the deflation because it's deflation that's holding back Japanese growth. And you might also say, yeah, but I mean, money printing, Japan were the pioneers in quantitative easing. They did it in the early noughties and it didn't really work. And that's true, but I think back then Japan went round it slightly the wrong way. They only ever bought short-term government bonds from the banks. This time round, they're going out into the market, buying from other sellers and buying long-term Japanese bonds, and they're doing it in a huge scale. And that's more akin to what the US and the UK have done over the last 4 years, and we've seen that that does boost share prices, and it does provide a jump start to the economy. Now I know QE has its problems, but when you look at Japan, which has had so many defects and has struggled for so long, it has to be the best way to end the deflation and get the recovery moving. And even better, we're seeing some encouraging signs of the program working. Inflation has now got to 0.9%. That's on the way to the target of 2% inflation that Japan wants to see sustained into the medium term. There's also some encouraging signs in the job market. The number of working-age Japanese adults with a job is beginning to rise, and the number of applicants for new jobs is also beginning to rise. That suggests to me that we're going to see wage inflation, and that means that workers may have more money to spend and will see more growth. Now, another argument you might hear is, well, it's all very well, fine, maybe Japan is going to recover, but now is too late. The best time to buy was a year ago. And that's true. A year ago was a great time to buy, and Japanese share prices have gone up a lot since then, at least 50%. But I still think now is a good time to buy anyway. And that's because of valuation. Let's look at the price-to-book ratio, which compares a company's share price to the value of the assets it owns. In Japan, the price-to-book is 1.68. In the UK, it's 1.8. 2.81. In the US, it's 2.5. So Japan is clearly the cheapest of the three, yet I'd argue it has the biggest growth potential of the three. So that's why I'm enthusiastic about Japan. The valuation is good, and I believe that the reform program will lead to a sustained, long-lasting recovery. Now, I'm not suggesting you should sell everything you've got and pile in 100% into Japan. There are always risks. And even if the Japanese stock market goes up, a falling Japanese yen might reduce your profits. But I definitely think it's worth investing some of your money in there. I think it's a good chance that you'll do well, if not very well. And it's the best place, it's the most exciting area for investing in 2014. So that's it for today. I'll be back soon with another video. Until then, good luck with your investing.